Hello everyone, welcome to the BISP solution. So our today's topic for the business rule is we'll see how to do calculate the cash flow, that is how to create the cash flow, get the numbers in the cash flow. All right. So let's begin. This is our FCCS application. We'll see. Although in FCCS application we have the movement dimension with the help of which you can create the out of the box cash flow, but how that out of the box is working at the back end. So for that we are seeing how what members are useful in creating the cash flow. So we'll, if we do not have the movement dimension, it is how the cash flow will be created just using the account dimension. So you can see here we have the some of the accounts we have the account dimension account members created, and I have what I'll do here is, like, we have accounts receivable member created. I'll use the short-term receivable and the changes in accounts receivable. I have created this, that is 1200, which will show you the changes in account receivable, that is the difference what was there in the previous period versus this period. Suppose, like, I have done the calculations. Let's start it again. Okay, so you can see what I'm trying to do is, suppose I have accounts receivable created, I have inventory account created, okay, and suppose I have accounts payable. Then if accounts receivable is 10,000 in January 24, suppose Jan 24, then what will be the February 24 accounts receivable? So if you want to create the cash flow in February month, it will capture the change. That is, now this month you have accounts receivable of 15,000, and in previous period you have accounts receivable of 10,000. So 5,000 increase it is showing. All right. So the differential amount, it will help you to show now, is this an increase in cash or a decrease in cash because of increase in accounts receivable. Similarly, if your inventory is of, suppose, 7,000, and it got increased to 14,000, you can say 16,000. So the differential amount, that is 16 minus 7,000, is this a positive, that's a cash inflow or cash outflow? So this is prepared in cash outflow with the help of the change of this period versus the previous period. Similarly, accounts payable, suppose here we have 4,000, and then you got here 4,500. So you can see that in January month the accounts payable balance was 4, and in February month it got increased to 4,500. So the change of 500 is nothing but increase in the accounts payable, and the cash flow will tell you whether this will, how this will impact your cash inflow or outflow. So the increase of 500 is does it leads to increase in does it leads to cash inflow or cash outflow? So this is what we are going to do. So my purpose will be, I'll be loading, like you can see I have loaded for, suppose I have this is Jan 24, and this is Feb 24. So you can see I have loaded for Jan and I have loaded for February month. So will it, what is the result for that? So this is the difference or the change it will show in the cash flow, but we have to first load here in Jan month and for the Feb month, and then it will give you the change, not in this, but we have created a separate, like, it will show you change in accounts receivable, similarly change and inventory, change in accounts payable, and then here it will reflect this amount, that is change of 5,000. So your accounts receivable is increasing, so it will show you negative 5,000. Similarly here inventory is increasing, so it will show you negative of 9,000. Accounts payable is increasing, so it will show you 500 change. So how we'll get to this figures, you have to load it here, and with the help of business rule it will help you to calculate this amount, these figures. Okay, so first I have created, you can see in the alias I have accounts receivable for which like 12101. Here I'll be loading the number in accounts receivable, and the similar change for this short-term receivable I'll capture in changes in accounts receivable, and I have created that member in account dimension with the account name as 1200 and the alias as changes in account receivable. Similarly, the second is your inventory. So I load in here 14100 in inventory material value, and I'll see for the two periods, and I'll see the change which will leads to your inflow or outflow in your changes in inventory account. The account which I've used here is 1400. Then the third which I have created, or I'll use like my changes in other current assets, and maybe I have linked here 17100, maybe other long-term receivables which I have linked it with. If there's increase, I have linked it with this the change in other current asset that we created. And then you have change in capital expenditure, which is a long-term assets, so you'll get it over intangible fixed asset under your building and improvement, and it is nothing but your 15120. I'll input the number here and we'll get the output, or we'll fetch the changes in the 1500 account. And the last, and the one I have taken for my accounts payable as well, which will be there under total liabilities, that is under FCCS current liabilities. And here you can see the 2100, that is changes in accounts payable, that is a 2100 here you can see. And accounts payable I have also created, this is the change where I'll get it, and the number where I'll be loading it, it will be my short-term debt 21200. Okay, so let's go to the rule. Under console, under rules, I have written this rule. Now you can see I have first fixed my 4 dimensions, that is your data source I've used as FCCS data input. For view I've used as FCCS periodic. For product I have used no product, and movement I have used no movement. Then this is the rule that I have written, that is if suppose this is changes in account receivable is my, this is my cash flow member, that is changes in account receivable. I want to see the figure here. Then how to get it? So it was if your is descendants, under your year total, it will show you changes in accounts receivable is equals to this is what I have created. How you will get the number in changes in account receivable? With the help of you have to use this at the rate prior, and then 12101 minus the current one, that is the change, that is this one versus your previous period. That means I am saying I want to get the change, so prior period is this one minus the current one. So like this you can see the change, because obviously from Jan how it is affecting. If the Jan was 10,000 and in Feb it got increased to 15,000, then you have to compare it like from 10 it got increased to 15. So you can see the prior 12101 minus the current one. So 12101, if you'll check that account, it is nothing but I think accounts receivable. Yeah, it is your short-term receivables. So I'm saying whatever is there in previous period versus this period, it should put the difference in your changes in account receivable. Again, your similar thing is your inventory. So 14100. I'm right now telling you what rule I have written and the effect, the result or the output we'll see in the smart view. You can see inventory material value. So what was there in the previous period versus this period, and it will put that change in your changes in inventory. Similarly for accounts payable, this is the number, and for accounts payable I have written in this that whatever is there in this period versus your previous period, the difference it should put in your changes in account receivable. Similarly for capital expenditure and your other current asset. And if I have started with the if condition, so I have ended with end if. I've started the bracket over here, so close the bracket, and then here you have written as fix, then you have to definitely end it with end fix. So this is the rule that we have written. I have, after writing this, I have validated it. Yes. Deploy this. It is successful. Now before launching it, I'll put the numbers, like suppose my short-term receivable, this is my account and this is the change you can see for the cash flow that I'm trying to derive. So if the short-term receivable, and you can see this is your January period and this is your February, then only it will give you the change in your February period. Here you will get the output correct in the February month in the changes. Okay, now my short-term receivable for Jan, suppose it is 14, and here it got increased to 21,500. Inventory, it was of 18,200 and it got increased to 27,200. Building and improvement, suppose I have purchased it for 90,000 and it got increased to 1,70,000. Short-term debt, suppose it was of 45,000 and it got increased to 86,000. Long-term receivables or suppose 19,000 and it get increased to 52,000. So these are the numbers which I'm trying to input. So submit data. Once it will get submitted, you have to come here and okay, so the numbers have come. Now we have to get the result over here. So launch. So first I'll run it for Jan, fetch the numbers. So it says there are no errors. So once you will refresh it, you can see I've got the numbers on Jan, and it is just whatever you have entered, it has shown you the reversal number over here because there's no change right now. Okay, so whatever, suppose it will compare the previous period. So whatever is the period, we haven't entered the number for previous period. Suppose for December. Suppose we are right now seeing for Jan 21, and the previous period would be your 20th December. So here the numbers are 00. So whatever you have entered over here, suppose it was 14,000 and then it was 18,200. So the differential amount, it will give you the negative, as it will say prior minus this period. So it will give you minus 14. Similarly, 0 minus the change, it will give you a negative. That's what it is showing over here. Because the previous period numbers were 0. We haven't entered any numbers over there. Okay. Now we'll run for February, and this was for January, right? And now we'll run it for February to get the February numbers. Right now it is not giving anything. So come back here, launch the rule. You can see it is for February. Now the period I've selected here for Feb 21. Click on OK. Okay, I haven't shown you the RTP values which I have taken, so I'll just come again over here. And you can see for consolidation, I have used as FCCS entity input. For currency, I have taken as entity currency. My entity used here is C101. Period is February right now. Scenario is actual. Year is FY21. Come over here, click on refresh. So you can see these are the numbers that you have got, and how you have got this number. Now we do the calculation. First is your changes in capital expenditure. So capital expenditure change, that means it will come from your building and improvement. So how you will get the change in your building and improvement? So building and improvement last year it was 90,000 minus it got increased to 1,70,000. That is, you'll get a difference of 80,000. Now if you think from the accounts point of view, whether it is in cash inflow or cash outflow, it is showing as negative. That means cash outflow, because earlier you had 90,000 building an improvement in your as your asset, but you increase that asset to 170. So you might have, because the asset is increasing and the cash is outgoing from your business, so it will show you a negative of 80,000, because we are just seeing from the point of view of cash inflow and outflow. Now the second is your changes in other current asset, which is nothing but your long-term receivable, which I have linked over here. So it should be 19 minus it. Earlier it was receivable was 19, and the other current asset was 19, and it get increased to 52,000. So again it will be an outflow of cash of 33,000. Inventory also same. Earlier it was 18,200 in the means in the January period, and then in the Feb the inventory got increased to 27,200. That means you have increased the inventory by giving the cash to the party. So that means that's an outflow of cash. So that is your nothing but negative of 9,000. That's an out. It shows an outflow. Accounts receivable is your short-term receivable. That means this. Okay, so you can see your accounts receivable is increasing, that is 14,000 to 14,000 to 21,500. So you can see minus 7,500 is the, because your receivables are increasing. That means you haven't got, you have done the sales to the parties, but they haven't paid you the money yet. So there is no cash in your business, but the receivables are increasing. So it is nothing but no inflows equals to outflow. So that's why it shows a negative of cash. Then you have accounts payable. So it gets reduced. Sorry, the accounts payable, if you see over here, that is nothing but a short-term debt. It got increased from 45 to 86,000. So if your accounts payable is increasing, so that means there's an inflow of cash, because you are borrowing the cash from the party, the other person. So that means there's an inflow of cash. So that is nothing but plus 41,000. So this is, you can see the numbers we have matched. So this is giving us the correct result. So this is how you prepare your cash flow by writing your business rule in this way. So this was all about today. We have seen the rule, how to write it, how to calculate the numbers, the changes for your cash flow, or whether it is an inflow or outflow, by writing in this way the rule for cash flow. Yeah. So if you have any questions, please contact BISP Solutions. Thank you all for your time and patience. See you in the next session for the next topic. Thank you so much.